Hi, it's Carl Allen. In this playlist, I'm going to be doing some deal reviews for you. So part of my Dealmaker Protege program, we review our Dealmaker student deals on a weekly basis. They're anonymized. We put them on a Zoom call. We break the numbers down. We look at the growth opportunity, valuation, what a deal structure might look like, interpreting the seller psychology and how that maps in to a desired outcome in terms of a deal structure. We'll then also look at what the exit options might be for you as a new business owner after you've grown the business and you want to go to market and liquidate the asset. So every single week we review a bunch of these deals, and my favorite deal of the week we're actually going to showcase for you on this channel. So absolutely check these out, and don't forget to like and share these videos, and definitely hit the subscribe button so that you're getting these deal reviews as soon as we release them. So enjoy the video, and I will see you soon. Until then, bye for now.
That is deal number 3. That is the brew pub. We are not on the brew pub yet. We are on deal number 1. So let me stop there. Anybody wants to do a screen cap of the simple model proper, there it is for you. I like to go down to the balance sheet and the income statement as I'm going through the notes. Again, I'm on deal number 3. Let me go to deal number 1. I thought I had that sorted out, but apparently not. Okay. That's about as big as I can get that one, and about as big as I can get that one as well. So what are we talking about here? This business is a manufacturer. I want to stress that word because sometimes it's not obvious, where in the, what role they have in the value chain of these red light, green light deals. So this is an actual manufacturer, not just a distributor or a reseller or a wholesaler. They manufacture commercial refrigeration, night blinds and doors. Pretty sure I can say with confidence, we've never had one of these before on red light, green light. If you're having trouble visualizing it, that's what we're talking about. You've got open display cases that are refrigerated in a supermarket or a convenience store. And, for energy saving purposes, you'd like to, close them off at night when the store is closed. They have these blinds. They also do doors. And this is an aftermarket product most of the time, I think. Although I guess sometimes it is. Maybe I should take that back because the manufacturers of these cases are one of their biggest customers. So let me take that back, that it's mostly an aftermarket. I think it's probably mostly you sell it with the refrigeration case. One thing that puzzled me about this deal, this is Eamon's deal, by the way. I think Eamon's on the call, so we're going to be able to check in with him a little bit later, is why manufacturers don't include this themselves as part of what they offer. But the customers are commercial fridge case manufacturers and installation companies. Common end users, these are kind of smaller operations rather than large supermarkets, gas stations, and other retail convenience stores. I can't imagine why it wouldn't work equally well in both situations, but they do specify that it tends to be some of the smaller stores that are the end users of their products. The products, like I said, are refrigeration blinds, night curtains, motorized blinds, freezer covers, and actual doors that are put in the aftermarket is also one of the biggest growth areas of this company. The country breakdown, this company is located in the UK, but they serve an international market. 40% of the business comes from the UK, 40% from the US, the rest of the world is 20%. I don't think I got a really clear picture on how they sell into the US, whether it's just straight to the manufacturers or whether they have reps over there or not. I think it's just straight to the manufacturer because I saw no information whatsoever about manufacturer reps or anything like that, but we can check in with Eamon a little bit later just to confirm that. The business has been listed for 7 months. The ask price is $1.5 million. They own the property where the business is conducted, but it's not part of this sale. In terms of the ownership story, business was founded in 2005 by a husband and wife team. They are 50-50 owners. Keith, the husband, he's pushing 70. He manages the sales process. Carla, a year younger, at 68, handles accounting and admin. The notes say Keith hardly needs to work. He's got this all buttoned down. Carla's doing some admin. Maybe she's doing payroll. She puts in about 20 hours a week. Son Andy is the GM, and this is the tricky part of this deal because son Andy wants to stay post-closing, but doesn't want to buy the business. But this is obviously an important part of the mix in this story, and Eamon, of course, pressing a little bit to say what's going on with Andy. But every question surrounding their son tends to be convoluted. Andy, even though he runs the business and wants to stay post-closing, attends no meetings, so no interaction yet with Andy. Why isn't Andy buying the business? Of course, Eamon's been, pursuing that with this particular seller as well, but not getting a real sort of clear answer to that question. Keith and Carla are willing to stay for a 3-month handover period. which is great, but Andy's supposedly running the business now and will be continuing to run the business. So if that continues, then obviously transition's not going to be a big issue. Motivation for selling, yeah, just kind of the typical baby boomer story. Keith and Carla want to retire and travel. They insist there's no urgency to sell, but they do give the distinct impression they want to take money off the table. And taking money off the table and Andy not buying the business probably are related because Andy hasn't figured out a way to bring some cash to the table to get his parents out of there. And so I think that's probably the issue is Andy doesn't know how to put the deal together. And so that's why he's not buying it. But that's just conjecture on my part. But the ideal buyer has been identified. Keith and Carla say the ideal buyer would give Andy ownership shares to stay and allow him to continue managing the business because you know what? Andy is keen to stay. He wants to hang around. The legacy of the business proper, not important. Anybody notice that to be a real change in the theme of these red light, green light deals, kind of post-pandemic? I just kind of feel like when we're going into it that most people would at least give some sort of lip service to legacy, but now it seems like the opposite is true, and very rarely do we have people saying legacy is important. But they do want their employees looked after. I mean, they're not, cold-hearted or anything like that. They're currently operating at 80% of capacity. The business is UL 94 certified, which is apparently a bit of a big deal in this space. So that's a real, that's a real feather in their cap. And whenever you see these certifications like this, and if they're mentioned to be rare and valuable or hard to get, then that obviously leads us down the path of shares or assets, right? I'm just trying for people who are kind of new to, kind of give you a feel in terms of like a piece of information pops up, what are the downstream consequences or ramifications? If we buy the assets in this deal, we're no longer going to be UL 94 certified. If it was difficult to get, but it's important to the business, right? Then we'd have to figure out a way to try to get the new entity that we put the assets into UL 94 certified, which, from the description that was given to me might not be the easiest thing to do. So that would be one thing that would sort of push this in the direction of potentially buying the shares, right? We want to keep our UL 94 certification. The biggest growth opportunity identified, as I mentioned, are these retrofit doors to be added to these open air refrigerator display cases after installation, kind of an aftermarket sale. No salespeople. Keith currently does all the sales. That's a bit worrisome because obviously Keith is hitting the road. They have about 14 customers because remember their customers are refrigeration case manufacturers and installers. They have 12 employees full-time, 1 part-time. The website is average. I think it could be a little more professional, minimalistic. So it's kind of like a little bit of a blah website, not terrible, but not necessarily helping either. But if you only have 14 customers, I'm sure the website really plays very little or no role in the sales process. No Google reviews, obviously, because we do have a B2B client here. I'd say the MUD score is below average. I mean, no stress or urgency at all was noted. They'll sell if the price is right. And that, again, is consistent with this idea that they want to take money off the table, right? They'd like to get something out of this deal. And so all those things are sort of conspiring to suggest that there better be a fairly healthy closing payment here on this deal if we're going to sort of make it work. And of course, keeping Andy on is important as well. And this is obviously not an SBA candidate. This is a UK company. So that's the deal. Now, when Carl is away, we sometimes spend a little bit of time on the numbers, especially if there's some specific issues at hand. I mean, one thing I would note here is that there is a lot of cash in this deal, £878,000. That's interesting. Stock or inventory, 604. If we take a look at that in relation to the cost of goods sold, that's, again, sort of an average inventory turn number. This seems to be a pretty well-run business. There is some financial debt on the balance sheet. There's $321,000 for different bank borrowings. There's also a current liability in terms of bank loans and overdrafts of 76. So there's about $400K there, right? So of course, if we're going to value the equity, right, the difference between the value of the equity and the value of the enterprise, financial debt is one of the big factors in there. But there is quite a lot of owner's equity. I have to admit, I look at quite a few red light, green light deals, and there feels like there's a lot of sleight of hand at work when either the seller or the broker preparing the sim, gets a hold of these financials and really tries to kind of like spruce them up and put a spit shine on them and, really sort of press to to try and make them as attractive as possible. Whereas in this one, I got the feeling that, yeah, these were kind of just straight up financial statements, no hanky-panky, everything looks good as far as I'm concerned. You know, they're only asking 1.5 million for the business. They have 1.9 million in equity. Is that equity propped up by anything, that could be shaky or iffy in terms of the current assets? No. I mean, the one thing it is propped up by is the land and the building, which is not part of the sale. So whenever you're trying to figure out how much goodwill is in this business, and the goodwill is the difference between the selling price and the owner's equity, and we're thinking, hey, like heck, there's no goodwill in this business at all. We have to remember that owner's equity is propped up by the land and the buildings. And so when we subtract that out, right, we're now down to 1.8, right? Which, again, it's a 1.5, I think, ask price. So again, that makes the goodwill, I think, extremely reasonable in a deal like this. Because, I mean, pretty consistent earnings, last 2 years especially, there are no lump sums added, which is, in terms of add backs, which is good because this is not a US company. And again, if you're sort of brand new to these calls, one of the things that we have to do is normalize income, and normalizing income for small businesses is a pretty important part of the process because a lot of people will run personal or quasi-personal expenses through their business. And if you are in the US and a C Corp, or if you're in the UK, or if you're in Canada, we don't have pass-through vehicles or flow-through vehicles tax-wise. That's exactly what a LLC and an S Corp is. It's a pass-through vehicle. So the tax, the income is taxed in the hands of the shareholders. The income is not taxed at the corporate level. And so for LLCs and S Corps, it's not as big of an issue. But for everybody else, C Corps in the US, Canada, Australia, and the UK, people do flow personal expenses through their business for the purposes of reducing the taxable income at the business level to reduce the double taxation. So where am I going with this? I think where I'm going with this is that for a UK company, you would not expect that number to be zero. So there could be some numbers that should go in there, but they haven't been brought to the attention. I don't think this is a broker deal. I think this is a direct approach deal. So that's sort of a good news scenario. I guess the other thing that you want to be aware of, though, and it's also a feature of UK companies, and we do mention it quite frequently on red light, green light calls when we do have a UK company, is that UK companies typically compensate the owners in a way that we describe as below the line. So they're compensated with a distribution of profit rather than a large, management salary. They typically will take a salary for tax purposes of around 12 or 15,000 pounds, and there's tax reasons for that. But everything above that, right, is basically stuff that is distributed to them below the line. So what does that mean? Well, certainly there's not going to be any add back in terms of extra compensation paid to owners. It's the exact opposite. If you're going to try and put somebody in there as a GM to run the business, and Andy, would qualify, he's not a current owner of this business. If Andy's already factored in to the expenses that you're incurring, it's not going to be an issue. But if you didn't have Andy, then you'd have to figure out some replacement salary that you'd have to, put in here as not an add back, but as a deduction to normalize this profit. So this is a fairly, important number in terms of getting clear. With Andy, we're already paying him. I don't think he's getting paid below the line because he's not a shareholder as far as I can see, right? So he's going to have, his expense already incorporated in as part of the expenses to come up with this operating income number. If we don't decide to go with Andy, we're going to bring somebody else and put them in there, right? This number is probably going to be a little bit smaller when we take into consideration, the management salary. And I don't want to go too much onto these numbers because I want to throw this over for some comment and some discussion. But the other thing that comes up frequently, especially when they own the building, is rent, right? We think, hey, listen, they own this building, right? So they're doing business on their own building. Is there any rent charge that was incorporated in when we calculated that operating income? I mean, at a guess, I would say probably not, but it's certainly something that should be on your checklist. It's certainly something that you should, double check to make sure. So what I'm really getting at is this number looks pretty good, right? It looks pretty good. But then the first two things we're going to ask ourselves is, does it include, paying someone to manage this business? And number two, does it include a rent charge? Because if we have to deduct both of those, this 597, right, is going to be a little bit more modest of a number. But I mean, all in all, this is 1.5 million in working capital. This looks like a well-managed business. Pretty consistent earnings. They've got a nice little niche. I like the business. It's a good little sleepy niche business that I think a seller or a buyer rather, like Eamon, could do well by acquiring. Whether he can acquire that or not, I don't know. Geez, it's so strange that I didn't notice that. We get the current ratio by taking the current assets and dividing it by the current liabilities, which if you do that right there is going to be about what, 5, somewhere around there. So a current ratio of 5, is that good? Yeah, that's pretty good. That's pretty good. All right, before I sort of shut this down and I bring on Eamon to give us a little bit more background and get some thoughts from the people who are in this call, I want to call on my good friend Sarkis, who has himself seen about 5,000 or 6,000 of these simple models and these deals, and get his take on it. Not a lot of time to absorb it, but Sarkis, I'm putting you in the Carl role here. Do you like this deal? Is this something
hi,
you
John.
can pursue?
Yeah, I do like this deal. And John, you and me, we think a lot alike when we look at businesses. So I pretty much agree with everything you've said there. So the numbers make sense. The business is really good. There's good opportunity to grow. For me, things to look out for in this deal is the financing of it. It might be a little bit overpriced, but because it's a good, steady business and, it's not that overpriced. So I think it's okay with it. Working capital, I don't know if that 1.5 million is debt-free, cash-free, or is it with working capital? So, depending on the terms, you could negotiate around the price, I guess, on that. The other big sticking thing is they only have 14 customers, which could be a bit of an issue. And of course, the internal politics of the son and how involved he is, and, how are you going to come around that issue? But apart from those things, I really like the business. I think it's a good opportunity. Yeah.
We definitely do think alike. And so I agree with you. I mean, I mentioned it, but I'm glad you reinforced it. I mean, Andy is kind of the key to this. We need some real background on the Andy story. Like, why isn't he at any of these meetings? Why haven't we met Andy yet? What's going on with him? Do we want him to stay? Yeah, that's a absolutely key part of this deal. Because if they're not doing much, I mean, Keith apparently isn't doing much. Hang on a second. Yeah, Keith's not doing much. Carl is doing a little bit of bookkeeping. So it seems like Andy is carrying the water on this deal. And if we're already paying him, then we don't need to do that adjustment. That helps. And in fact, we might have an actual add back there, because if we're paying Keith and Carla and they're not doing a whole lot, then that would be an add back to the salaries. So it is a good deal. A little overpriced, possibly, but a nice little niche. And you don't see businesses with this quality come down the pike that often. So I'm like you. I wouldn't consider this to be hugely overpriced myself. Yeah, so that's my take on it. Let's get Eamon on.
Hi, John.
Eamon, thanks for submitting this deal. Remember, everything's anonymous, so we're not letting the cat out of the bag on any of the specifics in terms of what, where, when. I know you know that. Just figured I'd throw it in as a reminder. But an interesting deal. How have things gone? Like, we talked about this 911 call a little while ago. What's the current progress?
We did. So I gave an indicative offer. And this is actually a broker deal, by the way. This wasn't a direct approach. I would have loved to. I came across a very small boutique broker that was, he's just dealing with very small companies in the area, seems to have quite good integrity. And so I kept on working with him, and we came across this deal together. Now, there are just a few things I wanted to add to some of the details that you touched upon. The lump sums, that was something that does concern me a bit. So I have been asking them for more information regarding their asset registry, their machinery and motors, and their age creditors and debtors. They don't really want to give me any more information until I've given them a formal letter of intent, because it seems as though, the owners, they're quite good negotiators. I mean, they built this business from nothing, and they almost want to just kind of pin down the numbers before they move forward. I can go into the type of offers that I'm considering offering them going forward. As for the adjustments as well, we do need to add salary for the owner's work, so all the work that they've been doing, because I think they do a lot more than they allude to actually do it, in the business. So I reckon I will need another person who's full-time that can actually do a lot of the admin work and just general.
But Eamon, are they paying themselves below the line? Are they pay themselves $12,000 and take everything else as a distribution of profit?
It seems as though that's what's happening, and they're taking the rest as a dividends. Yeah. So that's how it is. They own both units. The second unit they've recently brought. and the rent is included in the numbers for one of the units, but not for the other unit, which will be an additional £20,000. So that's not weight, that's currency. So that needs to be added in. So it's rent and salary for their son, who's currently on £40,000 a year on the business. And when we discussed what sort of numbers, would keep him going and what he would be looking for, 60,000 was actually the figure that they pinned down. And from doing a bit of research on it, it seems fair for the type of industry and for the.
Now, when we spoke, Eamon, you had not yet talked to Andy. Have you since then had any conversations with him?
No, I spoke to the broker and I sent more information because I wanted to give a very firm offer once I understood what assets and what assets had value and that I could leverage off. What creditors and debtors there were in the background, because there was a few things in the balance sheet I couldn't quite figure out. The owners got a little bit overwhelmed from my questions, and that's where we're currently in a position where I have to give them a more firm offer, one that I'm more serious about, so that we can actually start moving forward with whether we are going to continue negotiating or not. They just said it's a lot of work.
The way I would handle that, Eamon, the way I would handle that is, okay, they want something more than your indicative offer, right? They're overwhelmed with all the questions, etc. Then you can oblige and say, yes, okay, I understand where you're coming from, and your position is reasonable, but you have to understand that this offer, even though I'm serious about it, is still subject to the answer to all these questions that you don't want to answer until you get a serious offer. So it's a bit of a circular position, and you just want to make that clear to them that, yeah, you understand that they're overwhelmed, but they need to understand that you actually need this information to pin down what your actual offer is. So any more serious offer is still going to be subject to, just by necessity. And as long as you point that out, I think that'll help your position. Now, I do want to keep on time, but Sean is in this business. So I want to hear from Sean, and then I want to throw it over to Wayne, because Wayne's in the UK buying businesses all the time. So I'd love to hear from those two. Then we'll do a vote, and then we'll move on to deal number 2. Sean? You gave this a nice strong green light.
Yeah, no, I've been spent 17 years with Pepsi and 8 years with Dean Foods, a large milk and dairy producer. So I've been in these cases in grocery stores and working with manufacturers, and I've seen the transition of needing these curtains for to keep it cold and electronic and as well. And I've seen the progression. So this is a really tight knit industry. It's not surprising there's only 14 customers, because there's not a whole lot of people that make these cabinets. It's really specialized. And oftentimes they've got a model that then they adjust and they make specifically for different grocery stores and different convenience stores and everything else. So this is this is a great the good customer base, as long as you stay innovative, right? Because that's going to be the next thing, is that
Hey Sean, do you mind if I interject a couple of questions here? Sorry to interrupt you, but do you mind if I interject a couple of questions?
Yeah, sure.
Because you do have that industry experience, and the one that always is pressing in a deal like this is, is there a lot of personal goodwill in this deal? Is Keith kind of like the rainmaker here? He's got the relationships. It's all tight knit. It's very clubby, right? Is that going to be a factor if Eamon buys this business and Keith, rides into the sunset? How big of a deal do you think that would be?
I think it all depends on Eamon's ability to gain rapport with those customers, right? That would be, if I was buying this, I would say, hey, can I do a joint meeting, with the owner, and then take that on, and then show them, hey, this is a good handshake. I vetted out Eamon. He's going to keep this thing going and provide you great customers. Then if I could pick it up from there, that would be the reason why I would do the deal. If you can't do that, you're with only 14 customers. You can't grow it, without those guys.
There's got to be like a 1-to-1 handoff almost for all 14.
All 14.
Yeah.
Yeah, because
but again, the wild card is Andy. Maybe Andy knows these people, maybe he doesn't. I mean, he's the mystery man. Yeah,
because in the buyer's mind, you know, if I'm buying from you, Andy, is there going to be the same level of service? Can I depend on you, right? Because I got to get orders out the door. If I can't do that, then I got to go find, you know, a good second source supplier just in case you stub your toe.
Yeah. But I really appreciate that green light 80 from an industry insider. I'm sure that helps Eamon a lot. I want to just keep this moving. Thank you, Sean, for that. And just touch base with Wayne and get his thoughts on this deal. Are you red lighting or green lighting this, Wayne?
Yeah, definitely a green light. I've actually had the fortunate position of talking to Eamon about this deal a few weeks ago while I was driving. So really got to dig into this. And yeah, it is a great little business. And also when we started digging into the customer base and the sort of growth plans, it looks like there's a whole heap of untapped potential. For instance, some of the big customers are large petrol station forecourts where people usually own, say, 5 or 10, but they only seem to service one of those brands. And also they don't seem to offer services, things like fitting of them and the maintenance of them and all those little add-on bits that if you decided to add those as an extra service, team up with people around the country that already have engineers going in to do similar tasks like HVAC engineers. There's some good growth potential here without having to spend an awful lot of money. He could even grow by joint ventures rather than taking on overhead himself. Yeah. So yeah, I really like this. I think
Eamon would, when we talked about it, I'm trying to recollect because it was a few weeks back. I mean, I don't think I'd have a problem as long as the numbers checked out and paying the ask. I wouldn't go in at the ask, obviously, with my first offer because they are going to turn that first offer down. But I don't think I'd be terribly scared off by that offer price. I'm definitely green lighting this. Mine's green light 44. Sarkis, I didn't notice what you put in there. How did you score this?
I've got green light 65 on this one.
Okay, so
I think Andy plays a big role in this. So if Andy turns out to be a positive, then I'll shoot that up to 80, 85.
Wow, perfect. Okay, what I'm going to do is I'm going to bring up deal number 2. I'm probably not going to go into the numbers quite as much as I did on this one because we got to keep this moving. But thank you everybody for that. Nice opening deal, Eamon. Keep us in the loop in terms of how that goes.
So I hope you enjoyed that deal review. Definitely subscribe to this channel. Also hit like and share so that you're getting the very best content from me in real time. Every time I want to announce my deal of the week, I want you to see it so that you can understand it. And what's interesting is the more of these deal reviews that you go through, you'll start to see the patterns. You'll start to see how seller psychology and valuation and deal structure all kind of combine. You'll start to see common patterns when we look at the financial analysis. You'll start to see common patterns in kind of red flags and what the growth and exit opportunities might be if you bought a business like this and you took it forward into the marketplace. So definitely keep watching these and I will see you soon for the next deal review. Until then, bye for now. Hey guys, I'm Carl Allen. I'm the founder of Dealmaker Wealth Society. I've done tens of billions of dollars of deals over the last 30 plus years. If you're new to my channel, definitely hit like and subscribe so that you can get all of my amazing Dealmaker content in real time. You're not going to miss any of the outstanding information that I'm going to share with you. And if there's a question that you've got, if there's something that you want to know the answer for and you want me to speak to it, definitely hit me up in the comment section and I will record those videos for you and I will get them on this channel as soon as possible. So love having you part of this YouTube community and I can't wait to serve you. Until then, bye-bye for now.